Webull had a very strong Monday session, closing up by 81 cents, or about 6%, at $14.10 per share. That's a big move for a stock that has spent much of the last couple of weeks grinding sideways. So naturally the question is, what's going on with Webull right now? And is this breakout the start of something bigger, or just another short burst of momentum that fizzles out? Let's begin with the obvious. Anytime a stock jumps 6% in a single day, it turns heads. What makes today even more interesting is that Webull has been trading in a fairly tight range, between roughly $12.50 and $13.50. The breakout to over 14 is significant because it pushes the stock past resistance zones that had capped rallies in the past few weeks. That makes traders wonder whether Webull is stepping into a new leadership phase. There are a few forces at play here. One of the biggest is technical momentum. Over the past few days, Webull's relative strength rating has been climbing. It recently jumped into the high 70s after spending time in the 60s. For those who follow these kind of metrics, an RS rating above 70 is a clear sign of improving leadership compared to the broader market. When that happens, momentum traders, quant algorithms, and institutional screens begin to pick up the stock. That can fuel buying interest even in the absence of big fundamental news. In other words, the chart itself becomes a catalyst. Another layer here is the pattern Webull has been forming. According to some analysts, the stock had created a first-stage flat base with an entry point around $12.30. Today's surge past 14 means the stock is now more than 5% clear of that entry. That's often interpreted as the stock leaving its buy zone and stepping into the next stage. For some investors, that's a green light to chase. For others, it's a reason to be cautious, because once a stock runs more than 5% above its pivot, the risk of buying high increases. Either way, it highlights that Webull is on the radar of people who follow breakout patterns. Of course, none of this happens in a vacuum. The fundamentals still matter, and Webull's story on that front has been solid. The company's most recent quarter showed revenue growth of about 46% year-over-year. That's up from the 30% range in prior periods, so the trend is moving in the right direction. Customer assets on the platform are at record highs, and that signals that people aren't just opening accounts, they're actually funding them and keeping capital inside the ecosystem. Options and equities volumes have been strong, and the crypto rollout adds another growth lever. Crypto in particular is worth emphasizing. Webull has reintroduced crypto trading to US users after a suspension, and it's expanding its digital asset features more broadly. Given how volatile but potentially lucrative crypto volumes can be, this is an important driver. When Bitcoin and Ethereum see more engagement, platforms like Webull tend to benefit. That storyline resonates with investors who see fintech companies as bridges between retail traders and the broader financial markets. International expansion is also adding to the long-term thesis. Webull recently launched in the Netherlands, marking its entry into the European Union. That opens the door to millions of potential new users who want access to US equities, ETFs, fractional shares, and options. For a company that has already scaled strongly in the US, adding an entirely new region to its growth map is a major milestone. Investors love stories of global expansion, and Webull is now positioning itself as a global brokerage, not just a US upstart. So, with all these positives, why is sustainability still a question? The short answer is that Webull is still unprofitable. Losses widened in the most recent quarter as expenses for marketing, compensation, and infrastructure continue to grow. For growth-focused investors, that can be acceptable. You're paying today for scale tomorrow. But for the market as a whole, it's a reminder that execution risk remains. A company can't rely on revenue growth alone forever. At some point, the market will want to see a path to consistent profitability. Until then, every rally will be judged against that backdrop. Another factor is how the stock behaves technically after a surge like today's. Breakouts can be powerful, but they can also be traps if they aren't supported by strong volume or follow-through. If Webull can hold above $14 in the coming sessions and build a base there, that's confirmation that the move is real. If instead it falls back below resistance and drifts toward $13.50 again, then today's rally could end up being a head fake. Traders will be watching closely to see which way it goes. So let's put this in context. Fundamentally, Webull has momentum, strong revenue growth, record user assets, crypto re-entry, and European expansion. Technically, the RS rating is improving and the stock has broken past its recent resistance. That's a strong combination. But the risks remain: lack of profitability, fierce competition in commission-free trading, crypto volatility, and the possibility of failed follow-through on the chart. What would confirm sustainability? First, volume. If today's 6% gain came with a surge in trading volume, that's a sign of conviction. Second, follow-through in the next few sessions. A breakout needs confirmation. If Webull can hold gains, consolidate briefly, and then push higher, the breakout becomes more reliable. Third, news or catalysts. Updates on crypto trading metrics, user growth, or international expansion could fuel sentiment and justify higher prices. Without fresh catalysts, rallies sometimes fade. It's also worth considering the broader environment. Fintech stocks often move with shifts in macro sentiment. Rate cut expectations, inflation data, and regulatory news around crypto all feed into how investors feel about companies like Webull. If the broader market is supportive, it's easier for Webull to sustain a breakout. If the market turns risk off, even strong fundamentals can get overshadowed. So what's the takeaway from today's action? Webull's move to $14.10 is a breakout that puts the stock on leadership watch lists. The fundamentals are strong, the technicals are improving, and investor attention is building. But the sustainability question remains open. Bulls will argue this is the start of a bigger move as the stock confirms leadership status. Bears will argue it's an overreaction to technical signals, and that without profitability or new catalysts, the rally won't hold. My view is that cautious optimism is warranted. A 6% rally on improving RS ratings and solid fundamentals is not something to ignore. But neither is the reality of competition, losses, and volatility. The next week will be critical. If Webull can hold above 14, consolidate, and show steady volume, the case for sustainability strengthens. If it fades quickly back into its old range, it suggests the market isn't ready to reward it with leadership just yet. So to sum it all up, Webull closed Monday at $14.10, up 81 cents or 6%. The breakout past resistance marks a significant shift in the chart and highlights Webull as a potential leader in the fintech space. The fundamentals remain strong, with accelerating revenue, growing user assets, crypto re-entry, and European expansion. But sustainability hinges on profitability, competition, crypto volatility, and technical follow-through. The story now is whether today's breakout is the start of a new rally or just another fleeting burst. What do you think? Is Webull stepping into leadership territory, or is this move too much, too soon? Share your thoughts in the comments, hit like if you found this breakdown helpful, and subscribe for more updates on Webull and other growth stocks. Thanks for watching, and I'll see you in the next one.